All right, we're back with Gino Littlestone, the Executive Vice President of
Sir.
Alliant. Kind of a big title. I mean, it sounds important.
It's of our real estate division. It's a big company.
Okay, got it. Well, I'll take it.
I'm one of a few.
We're going to show off that I know you. I'm
I
going to
appreciate
introduce you as the EVP.
I'll take it.
I'll be like, this is the EVP of Alliant.
I'll take it.
So we're going to be continuing on with flood insurance. We're going to first start with FIRM. What is FIRM?
Is federal insurance rate maps.
Just so you know, I've had this wrong my whole life. I always thought it was flood.
Well, it is flood, but the acronym FIRM stands for rate mapping.
I have always thought it was flood insurance rate mapping, just because I only deal with it with flood, I guess.
It is.
But all right, so it's a insurance.
It could be flood insurance. Now that you're saying that, maybe it is flood insurance rate mapping. Whatever it is,
I don't
it
know.
has to do with.
We're gonna fact check this,
we'll
and we'll get back to you with what the right
You're
thing
probably
is.
right.
I know, I'm not sure. Federal makes sense because
Yeah.
obviously it's the federal government doing it, and they're creating the maps.
Either way, it's also the same thing.
All right, so we've got it's maps. What do the maps do?
So the maps dictate. So everybody we'll just use Florida as an example since we live here. Everybody in Florida is in a flood zone, right? We are a peninsula. We're surrounded by water. There's water everywhere. Everybody is in some flood zone. The difference is whether you're in what's called a special flood hazard area. That's where, and to also just to back it up a minute, it's very important to understand that flood insurance is fully lender driven. What I mean by that is if I have a home and I'm right on the water and I have no mortgage on that home, nobody can force me to buy flood insurance. But at the minute I take out a $10,000 line of credit, that lender is going to force me to show flood insurance on that property for the amount of the loan that I'm taking. So it's very important to understand that this isn't your insurance agent, this isn't anybody other than a lender requiring that coverage. So when you are in a special flood hazard area, and those are generally dictated by some A zone, so it could be A, AE, A10. I don't care what's behind the A. The A means that you're in a special flood hazard area. If you're in a V zone, which is generally considered a high velocity zone, those are the ones that typically sit right on the Gulf or in some really high potential surge. So if you're in an A zone or a V zone, you are required by a lender to obtain flood insurance on the building. If you're in an X zone, which is the more inland zones, you are not required by any lender to obtain flood insurance. It doesn't mean you can't flood. That's a very poor misunderstanding by a lot of people, is that they're like, oh, I'm in an X zone, I'm safe. Well, over 35% of all floods that occur happen in non-special flood hazard areas around the country. So if you think about last year, what happened in North Carolina, vast majority of that was not in a special flood. I think all of it probably was in a non-special flood hazard area. If you remember going further back when it happened in Colorado, up in the mountains when they had a tremendous amount of flooding that went on up there, nobody in those areas was in a special flood hazard area or carried flood. So it's a matter of the requirement versus the risk and whether or not you can accept that risk yourself internally or you have to purchase flood insurance to lay off the risk.
So map.
Abilities. 1 in 100 year flood zone, 1 in 500 year. But you're talking about the federal government and they're taking a view from a very high, area. They're looking at 10,000 feet up down to whatever the topography was based on, I don't know how recent their maps are. So that's why it's not uncommon for certain areas to flood that they said was unlikely. I think just in the last 5 years, there have been a significant number of 1 in 1,000 year flood events. South Carolina's had multiple. North Carolina, we've had, Miami, it rains and it floods now. And a lot of those areas are not required to carry flood insurance, believe it or not. So, there's parts of Captiva Island that were moved out of the special flood hazard area into not being required to carry flood. Captiva Island, there's a reason why they're called barrier islands. Those islands are there to be a barrier for the mainland. None of those areas, in my opinion, should be allowed to not carry flood insurance, but you're dealing with a federal agency that isn't always right.
One of those revised.
It's all over the place. We've seen them. I can think of in Collier County, I remember they were revised in 2000 and then they just got revised again, I think last year, the year before. FEMA just goes through and does these updates. I don't know that the there's any necessary exact timing of when they do it. It's what resources are available. I would say right now, the way that system's kind of been gutted, they're certainly a lot slower than they have been in the past on claims and things like that. So, I think the intentions are more often because they want to spread the risk out over the country. That's one of the main basis of insurance is spread of risk, right? They don't want all their eggs in one basket. And so they try to spread this risk out. And so they're looking all around the country for places that could, what they think, potentially flood in a 1 in 100 year loss, and then rezoning those areas. And then the lenders will come in and require them to carry flood insurance and things like that. So it's an ongoing effort around the country where they're rezoning.
So, and insurance is, it's kind of like the casino. You should not actually be winning with insurance as an individual. A group of individuals cannot win with insurance. Insurance should have more money going into it than goes out of it.
Ideally, yes. If you want the insurance companies to last.
Well, yeah, if you want the insurance company to last or to be there.
Their claims. Correct.
It does.
I always say I like my insurance companies a little fat and happy. I don't want them gorging anybody. I don't want them overcharging. But I want them to be comfortable enough to where they have the money to pay them.
Don't go through this again,
yes.
Back to my hives. So now the MAP and Risk 2.0, they're sort of interrelated.
Yes, they're always related. The difference is Risk Rating 2.0 has to do with the premium rates that are assigned to any given risk. And so prior to Risk Rating 2.0, that really hadn't changed since the 70s when the program was started. It used to be based on elevation of a structure. So you'd have an elevation certificate. The elevation certificate would have a lot of very detailed scientific information on it. But at the end of the day, we'd be looking at what would be called the base flood elevation that was assigned by FEMA, and then the top of the first floor of any building. And depending on what that was, so if I had a building that sat at 10 feet, the base flood, and then the elevation of the building was at 10, it'd be a flat elevation or a 0. If it sat at anything over a 0.5 or higher, so if it was 10 and it was at 10.5, they get a +1, so they get credit. If it was 10.4, they would round it down back to 0. So you could have side-by-side buildings in a community, one being at 10.5, one being at 10.4, and their premiums could be thousands of dollars different. And it was all based on that elevation certificate. Now, Risk Rating 2.0, it's all based on distance to tidal. So I can have a building that is technically in an A zone based on what FEMA's maps say, and a building on the other side of the street in an X zone, and their rates are almost identical because when I rate them up, that distance to water is very close. They're not going to be exactly the same, but they're going to be very close. Whereas before, it was kind of backwards, because what would happen when you are buying flood insurance, there's a line in the premium summary that says CRS. That was community rate discount. Okay, the community rate discount is applied if the community you're in, and this was in the news not too long ago, last year.
Yeah, I was
like Fort Myers Beach.
We'll touch base on that.
They got in a lot of trouble because they let some things happen and they got their discount stripped away, and it's like a 25% discount. It's a big discount. But you can have before where you could have somebody in an A zone with a positive elevation actually have a less expensive premium than somebody right next to them in an X zone trying to buy coverage because they don't get the community rate discount. The community rate discount only applies for the special flood hazard. So a lot of confusion when it comes to all that, but the big difference is the distance to water rating is significantly higher in the new program than what it was in the old program. So you can have, we have properties, for example, that were built just prior to Risk Rating 2.0 that, let's say, we're paying $4,000 for flood insurance, and 4 weeks later another building COs and we have to place flood coverage on that building, and it could be $20,000. It's a significant difference.
But there's still an elevation component to it then, right?
Very minimal. You can use an elevation certificate if it helps you. They'll apply it, but it's not anywhere near the impact that it used to.
I find that interesting just because in my head, logically, let's say that
Don't apply logic to the federal flood program.
my house is right here.
Yeah.
Here's the water. Your house is on the other side of the street. Here's the water. Your house is further away from the water. Your house is twice as high as my house. It would seem that this would be the one I'd want to insure, not this.
Correct. And again, there can be some credit applied, but it's not driven by the height of the building anymore. It's all driven by distance away.
And then if I reverse it, I still would rather insure this.
You're implying logic into the federal program. It doesn't. I agree with you wholeheartedly, but it just doesn't always apply that way. Very frustrating.
And then we were talking about grandfathering.
Yeah.
So there is the reverse of a glide slope takeoff path to get rates up to where they should be.
Right.
Correct?
Right. So when that program came out, everybody, because there's this glide path that originally we were all led to believe that it was an 18% maximum. It later came out that it was an 18% average and it was a 25% maximum rate increase. So you can get anywhere from 0, which almost never happens. There's always some rate increase in there, to as high as a 25% rate increase. Now, the question that we all had as agents was, when does that end? And the response was, well, when the rates are actuarially sound. When do the rates get actuarially sound? We don't really know. So we can't give any of our clients really definitive answers to when does this end, because we don't really know. Nobody can tell you at what point is it actuarially sound, because the actuaries are always changing. So the best I could do would be to tell someone, okay, if you're in the grandfathered program and I rate you up under the new program is supposed to be more actuarially sound. So if you were at 4 and now these guys are at 20, you've got a fair way to go before you ever get to 20. That's probably as good as you can give somebody as far as how long will it take, unless they decide to change the whole thing.
Right, and that's it.
Which they can always do.
Because again, the logic here is still bothering me, that a higher building can pay more in flood insurance than a lower building.
Again, I don't, when we do flood, we still encourage people to get the elevation certificate, because we don't know the answer as to what will happen until we turn it in. It used to be we could rate up all flood. It was a plug and play system. You took all the information, you plugged it into FEMA system or Hartford, whoever you're using, and it would kick back a rate for you, and that rate was what that rate was. Now, that actually goes into FEMA underwriters. They're actually rating that up. So it takes it out of the agent's hands from a rating perspective. So I can't tell you whether it's beneficial or not for you. It's kind of like wind mitigation inspections in that respect. I can't tell you what credit you're going to get until you give me the wind mitigation inspection and I give it to the carrier to apply credits. So is it always worth it? I can't tell you that, but if it's $200 or $300 to get an elevation certificate, probably worth getting it done just in case.
So we touched on the community discount, and my understanding is the community discount is offered to cities, municipalities that follow the rules. FEMA comes out and says, here's the rules of what you have to do. If you agree that you're going to do this, we're going to offer you 25% off everybody's flood insurance.
Right.
But what that means is that if the building's depreciate, I'm trying to simplify it a little bit, but basically if the building value is, if your building is damaged and to repair it is more than 50% of the building value, you've got a problem. And we're going to need you to basically make your building higher or something, which you can't really do. And so we have seen a number of associations that are, I would say forced to dissolve, but are dissolving. Because if you're a 2-floor condo on, you mentioned Gulf Shore earlier, or you're a 2-floor over on Fort Myers Beach, and 50% of your building is gone, well, you've got a problem.
So one clarifying point of that. The 50% rule is the 50% of the market value of the building, not the replacement cost of the building.
Correct.
So that's why after Ian, everybody was being told you have to go out and get a market value appraisal. Our insurance appraisals didn't apply. Correct. So you have to go out and get a... So in a lot of cases, getting to that 50% threshold is somewhat difficult. The issues that we saw happening why some of these municipalities lost their credits was because they allowed in, and there was evidence that they allowed in unlicensed, uninsured contractors to do the work, who weren't pulling permits, who weren't doing things properly. That's why most of those communities got into trouble.
Right. My understanding was there was a lack of permits that were being pulled.
Well, there was a lack of permits because there was a lack of uninsured, unlicensed contractors doing the work.
But,
Both.
But my understanding is the way that this all came to light is they were trying to determine how much, because it's over a period, it's not just one time, by the way, it's over a period of 12 months.
Right.
So they were trying to go back and determine what happened over these 12 months to make sure that that they're under this 50% value. Mm-hmm. And then all of a sudden they're like, what do you mean you put in all new windows? What do you mean? Because everything counts towards it. It's not just not just a single event. It wasn't a flood event. It's everything up until that point. And so that community discount rate has kind of become a bit of a focus in Naples, as well as obviously in Lee County, where this impacted them. And I believe they have theirs back, if I'm not
They
mistaken.
just received it back.
So
Yeah, they were denied once or twice for not giving all the information I guess FEMA was looking for, and now my understanding is they've all got it.
So, in order to make sure that that's preserved, a lot of folks in Southwest Florida, a lot of the municipalities, are paying a lot more attention to that. And they're putting it on the association, they're putting the onus on the association that you need to monitor your own. Because the real problem that exists with the association when we try to take this all into consideration is, you are correct that, obviously you're correct, it's market value of the actual building itself, but it's the building, not the property or anything else, or the structure. So if we go through a storm and we didn't have any damage at all, we're great. And we said, you know what? We want to replace all the windows in our building. So we replaced all the windows. This building was built in the 70s. We want the newest stuff. So we replaced all our windows. You know what? Our roof is coming up too. You very easily, between a windows and a roof, could exceed that 50% number.
Sure.
Okay, so let's say that we are just under the threshold though. What happens when someone wants to remodel their kitchen? Because it's not just the building, it's everything that goes on inside the building. So someone wants to remodel their kitchen, now we got a real problem. So buildings are having to monitor that, the reason being that community discount. So back to whether it's federal or flood, if you want to try to get, let's say that I'm in a V zone, and I don't think I should be in a V zone, it's a mistake.
Right.
It's a process I can go through to try to get out of that zone.
Correct.
And that's called a LOMA.
There's a LOMA, there's a LOMAR.
Okay.
A LOMA's a letter map amendment. Yeah, there's different things, but they all get to the same point, which is trying to remove yourself from the current zone.
And all that process, from what I've seen, usually takes us at least a year from start to finish, sometimes 18 months.
It can. Yeah, I mean, you have to bring an engineering firm in to do it. It's a very scientific study, and it somewhat goes back to the comment I made before from FEMA looking from a bird's eye view at 10,000 feet up on what's there versus an engineering firm actually being on the ground and showing the actual area. It could be berms that are there that weren't there before. I mean, I've had entire communities that were developed that were pulled into special flood hazard areas because the maps that FEMA had were before the developer came in and put in 4 feet of fill throughout the whole place. And so they didn't know that was there, but it still falls on your client to go through the exercise of getting an engineer in. And it's essentially petitioning FEMA to change the zone that you're in. It's whether you're going from a B to an A zone or an A zone to an X zone. Ultimately, that's what most associations are looking for, is to get out of that special flood hazard area to a point where they're not required to carry flood insurance anymore. And then it's optional. Then they do what they want. The vast majority, if they're not required to carry it, don't. But it's important that they still understand there is risk involved if they don't carry it, because if they don't carry it and they suffer an actual flood, they are what we call in the industry self-insured for all losses. And that can be a big number.
The reason that they have to carry it can vary though. Because so if you are in a special flood zone, for loans you have to carry that insurance. But then there's also the association documents. And so, I mean, it's possible that you are in a zone, you go through a LOMAR or a LOMA, but you still have to modify your documents because your documents say you have to carry flood insurance.
If your documents say you're required to carry flood, then yes. I would say most that I have seen, the wording would be if required by law. Similar to work comp, there's kind of outs in there in most of them, but I've certainly seen ones that say you're required to carry flood insurance, and you're right. No matter what zone you're in, your documents say that, you need to carry that.
And when you change the zone, it doesn't change what you're paying for insurance.
It can. If you're in a V zone versus an A zone, it certainly can. If you're in an A zone to an X zone, again, before it had more of an impact, now not as much.
I was thinking more the A to X, because what's in my mind at the moment is a specific situation which has been in the news. It's in Collier County, out in the eastern part of the county. It was a developer built an area. It was an X zone. They moved it to an A zone.
Right.
And all of these, it was a relatively new development. I want to say that I think it was even still developer controlled, the HOA, 2 or 3 years old. And all of a sudden now all of these owners are having to factor in flood insurance using Risk 2.0 and the higher rates. And they're trying to go from they're trying to move themselves back out of it. And in that case, there's no documentation requirements because it was an HOA.
Yeah, we have a property way down. I mean, it's east of 951. New property down there that, and maybe the same one you're talking about, that happened to. And so we had to write that flood insurance while they were going through their LOMA process. Once they got LOMA'd, they're going to let their coverage expire. Very frustrating part of that process that we realized and found out about after Risk Rating 2.0, they didn't just change the rating system, but they also changed some of the cancellation provisions.
Yeah.
And so before Risk Rating 2.0, if I had an association that went through a LOMA and got removed and they gave us the LOMA, we could send that in and cancel their policy based on a zone change. Well, there's a number of different cancellation provisions. Well, FEMA decided to take that one out. And so we had associations, I had one, quite honestly, that paid $230,000 for flood insurance for the year. It took them in their case, it took them about 7 months to get through the LOMA process and get it all approved and done. Now, I knew the provision existed, so I told them up front, if you buy this flood insurance, I cannot cancel it. You know, there are always people within associations that are smart and sometimes think they're smarter, or sometimes just don't listen. And so they were very upset when the LOMA got completed, and we had to tell them we couldn't cancel it. We showed them the provisions. We even tried to cancel it, sent it in, put in what we thought was the right or could be a provision. The provision everybody always goes to, and this is what a lot of places try, is that if you have a single family home and you change, you can rely on the lender no longer requires you to carry the coverage because you're not in the zone. But when you're in a condominium association, in the building, the loan is not on the building, the loan is in an individual unit owner's name. And so several associations tried to get us to cancel their coverage based on that. I told them it wouldn't work, but we tried anyway. And I was right, it didn't work. And it's very unfortunate. It's not right that they shouldn't be able to cancel it midterm. But that's one of FEMA's rules, that they literally took that cancellation provision out of the policy. And so you cannot change it based on a zone change anymore. You have to carry it through the year and then just not renew it.
Yeah, I happen to know that from a similar situation over in East Naples as well, but they actually they've been in an A, they've always been in an A, and they just now got pushed over to an X. So we're dealing with that there. So obviously Irma and Ian have been a lot for us to take in. We've seen a lot of changes from it. And one of the changes that I feel I've only seen in maybe the past 2 years have been flood barriers. And a question that we're starting to be asked is, if I have hurricane shutters, I get a discount on my insurance. If I have flood barriers, do I get a discount in my flood insurance?
Not yet. I think it's too new. I was actually talking to a flood broker a couple days ago, and we were talking about that. We're talking about a lot of different things that he might be able to do, but that question came up specifically, and I mean, that was his response too. He said, it's just too new. There isn't enough data on them yet that has gotten into that program to allow them to offer discounts on those things. I will tell clients the same thing on flood barriers as I tell them on high impact windows. If in fact FEMA does offer credits, it probably will not be anywhere close to enough to justify the cost of the barriers, but you're preserving your property and potentially preserving life. It's the same thing on high impact glass. Is it a good idea? Absolutely. The credit that you get for those on your property or wind policy, your great grandchildren eventually will recognize them because it is so minor that it's a great idea. I never tell someone not to do it, but don't do it for insurance credits. It's not enough. It's great to preserve your property and to save your life. And I think the same thing with flood barriers. If it can preserve your property, at the end of the day, absolutely well worth it. I don't know that it'll ever be enough of a credit in a flood policy to actually justify for that reason.
Yeah, I mean, I think the flood barriers is a little different than the high impact windows because the high impact windows are just obscenely expensive.
They are.
And you also are dealing with doors and all of that. The flood barriers, I think the challenge is that first, there's a lot of options out there. We've tried some in the last storms, and some worked well, some didn't work well, and even it depends on how the building is built. You can put a flood barrier up in front of your door, and it just comes up underneath the foundation anyway. It might be a little slower, so you've got that going. The other part of it is that those flood barriers per door are probably $500, $600.
Yeah, I haven't seen the cost on them yet.
Yeah, so they're not as expensive. I mean, it depends on which barrier you're looking at. And then getting back into the FEMA thing, there was a period of time where flood barriers didn't really need a permit if they were not permanently affixed flood barriers. If they were the barriers, I don't want to name names to run this, but there's a product that it's basically you put it in the door and it's like a bicycle pump. You pump up the thing around it, you put up some tape, And there was, okay, that's we don't need permits there, but if you're going to have the ones that actually bolt on, then you're going to need permits for those. I think that it's an interesting area.
Yeah.
What's the strangest thing you've been seeing in floods?
As far as coverage or the actual
Just
flood
in general,
itself?
floods with stuff that ends up getting hit afterwards. And
I would say my worst that I saw was after Ian. I was on Sanibel the week after the storm. I got onto the island and we're walking around, and there was a particular association we handle. It's kind of a U shape, sits right on the water. And I was walking around back, and it was devastating. This thing took an 18 plus foot wall of water and stood. Properties around it that were lesser construction that got wiped off the foundation. This one in particular stood, and I'll never forget. I'm walking through the middle of the property. I'm looking at the pool, and it's just devastated and everything. And I hear someone yell at me, and I'm looking around. I'm like, I'm gonna get shot. They think I'm a looter, trespassing, whatever. And I look up and I see an owner and his wife, two owners, in their unit. Now their first floor was about 15 and a half feet up, where the bottom of their first residential units were. And they were in there cleaning out their unit already. And I'm like, telling who I am and, putting up a white flag. And I'm like, don't shoot. I was like, what are you doing here? There's no power. There's no nothing. Like, well, we're just pushing the water out of our unit. And I was like, and they showed me the line in their unit, 2 feet up in their unit, where they had gotten flooding in this thing. Look, I grew up in Fort Myers. I've lived in Florida since 1972. I've never seen, I can't imagine what an 18-foot wall of water looks like coming in at you, other than what you see in the movies. But when you look around, fortunate, I've never been in a war zone. I've been very fortunate to not have to see certain things. But when I walked around that entire town, it's the only thing I could compare it to. The amount of debris and the thing, seeing the, literally cars and trees, sideways and things like that. I never thought I would experience anything that was quite that devastating.
yeah,
And it takes away the things that I will say and not say. I will not ever say never. I will not ever say that can't happen, because now I've seen things that just, to your eye, you can't believe you're actually walking through them.
Yeah, and for me, we've been through a lot of storms. The flood seems to be the most devastating thing. I remember, I think it was after Irma. I was out in countryside. I think you showed up.
Yeah.
It was like you were with a bunch of guys from an insurance company. We're out there trying to figure it out. It was just days after the storm had passed.
It was AMCAP, actually.
Oh, it was AMCAP. And so I remember I saw you out there, and it was bad. There were trees that were down, all of that, but the flood was totally different. I remember at my house in one of the storms, I had a Mazda SUV. The flood came up and it took my Mazda, and I just washed my car as it's floating away, and the windshield wipers are on, right? And like it's rolls down its windows. It's crazy.
Well, they say you shelter from wind and you run from water.
Yeah, and so
wind can hurt you. Flood will kill you.
Yeah, and just the accessing for damage you're mentioning afterward. So when we have after a storm, interesting thing with flood insurance to me is that you're an agent, and I do think very highly of you. I think you're a great agent. There's a number of other agents that are very good, but nobody has a leg up in flood. Everybody's quote is the same. It's not like you're dealing with Heritage or something where you can go and try to negotiate and make the association look better, where you might have access to lines that somebody else doesn't have access to. Flood's flood. So really the only thing, there's nothing that differentiates each flood carrier, whether it's Travelers or whoever. We're all in the same boat, unintended, right? After a storm comes through, after a flood comes through, we treat it very similar to the way we treat wind. We try to document everything that we can. But then the other problem that exists with flood is sometimes we're trying to document what's not there. Because it's kind of reminded us that before flood events, we want to have pictures before the flood, because sometimes stuff is totally gone.
So I mentioned we do our best to try to learn from every event. Right? We look back at what did we do well, what did we not do so well, what can we improve, change. And I would say without any exception, what I think we learned most from Ian was just what you're referring to, which is pre-loss inspections. There are now companies that are out there that will do these things for you. Some of them large restoration companies, other things that you can bring in before the event. And I strongly recommend that will do a full detail of the entire structure, where things are, drones up on looking at the roofs, do everything So obviously their incentive is they want you to use them after the event. But I would say most of the contracts that I've seen don't require that. The only requirement is that they're included in the process of bidding it out. So if you're going to look at 2 or 3 contractors, they just want to be one of them, which I think is fair if they're going to do this work ahead of time. But I think it's more important than ever, because of what you just said, that there are going to be things that are going to be gone. Carrier may say, yeah, right, sure, that's what was there, and you have no way of documenting it. If you have pictures, if you have videos, if you have an entire booklet of pre-loss information, when that loss occurs and that adjuster comes out and you're trying to have the discussion with them of what was there before and what it looked like, if you have that documentation ahead of time, A, you're going to help your claim, but B, you're going to help the adjuster give you a good settlement. And the more you can do, the nicer you can be, the more information you can provide to them and make their life easier, I promise you your settlement will be better than if you're fighting and arguing about everything. It's just logical. It makes sense that if you can present that to them, they're not going to be able to say your roof was poorly maintained and it probably already had cracks and this looks like it was lack of maintenance and everything else. If you had a drone video 2 months before that showed a perfectly clean roofing system, where the pictures are worth 1,000 words, right? So yeah. It's just, that's what I think I've learned more than anything, whether it's a flood loss or a wind loss, whatever it is. I think everybody should have that type of service ahead of time and have that documentation ready to go.
Well, I appreciate your time. We'll be seeing you again. We've got our hurricane simulation coming up in a week or 2 weeks. Yeah. Next week. Next week, hurricane simulation. I can't believe we're already going to be dealing with hurricanes again. All right. Thank you very much.
Thank you.
And see you next week.
Absolutely.